Hello everyone, it's Calvin here. Thanks for checking in today's video. Today is Tuesday, June 18th, 2013. Let's go right into these charts. I haven't done a video for quite a bit, but I just wanted to give you an update what I'm seeing. I kind of occasionally like to do this. On the SPYS, the daily chart, let's go look at it. It looks like we had made a symmetrical triangle the past few trading sessions, or the last few week trading sessions. If you're looking at weekly candles, a few weekly candles. But if we look, we kind of made this triangular symmetrical triangle, and usually on a down leg these usually break down, but the definition of a symmetrical triangle, sorry, excuse me, is they can break either way. And as you can see, this one is breaking to the upside. As soon as we did that, I went ahead and sold some puts to the downside at the 158. Yeah, it usually means if it's breaking out to the upside that it's going to see further prices northbound, and that's what we got. So that was a beautiful trade, already in the money beautifully on those. I actually sold the 158 put spread, so I think that's the max downside you're going to get in the next few trading days. So that's the reason why I went ahead and did that, because I did draw the measured move down roughly, just a estimation from what I was looking at off a three-wave pattern, I believe, and that it pretty much brought me to that vicinity. So I went ahead and took a shot at it. In the short term, I think that's probably your target right here, right around 158. That's where you find consolidation here. Also a gap fill candle here. This is your top gap fill and lower gap fill candle, and it's also a pivot breakout where they made a pivot and decided to break out of this consolidation range here. So that's the reason why I did the 158, and that's so far that's a beautiful trade. Let's look at intraday. I've been doing some pretty awesome scalps in intraday. Let's go back yesterday. I wanted to do a video yesterday, didn't have quite the time. So we look back on the 17th of June. We'll pretty much made a gap and go, consolidated for the whole day, failed to break higher. So once you saw this, that was my a chance to catch some of these drops and play for scalps. Okay, first scalp, what was it? It was the 50-day moving average. So, but you got to realize that it just came from came from a high. So this level is very risky. So I knew to play the Pierce. So once you get increased volume like this, you can get 1, 2, 3. 1, 2, 3 surge down into the first hit of a 50 moving average. This is a 10-minute chart, guys, on an intraday basis. So every candle you see is 10 minutes. So as I saw this, the volume was increasing. You know what? I'm gonna wait for a pierce of this level. Sure enough, people that the amateurs that were buying in here, even though he had a gap window here, and I believe a 382 retrace here, I was smart enough, and other smarter traders saw you should wait for a pierce first, and that's exactly what I did. Got in on this pierce. Got out right here very quickly for a nice gain, and that was the right move as it flushed on the next 10-minute candle. The next one, as you can see, the volume, I played it again on an intraday basis for a scalp. As the volume was starting to die down, so I knew right now this time it probably would not pierce this level because of the volume was kind of petering out here, kind of just drying up on the volume. And as soon as I saw this kind of a doji candle here with the 200 moving average, that was your buy signal. Beautiful buy signal. Look at this trend line as well. It's been riding this trend up for very nicely. So that was another signal. No brainer, guys. Took that. And as soon as you close above the doji candle, that's your sign. Every time I see a close above a doji candle, on the next candle especially, I always wait for a retrace. Always wait for a retrace. Never chase it up here. I always wait for a retrace, maybe 50% of this current move, and that looks like what happened. And sure enough, you got the surge up. I wish I took a bigger position. I could have just rode it all the way up, but just a quick scalp. Took it right here on this first candle. I knew those were ups. I could have gotten in right here on a retrace, but I went ahead and took it right here as it retraced right here off this first candle and took it right here. Profits. Could have re-entered on the pullback here after it closed above a doji. That's a very strong reversal signal. And the doji was on pretty decent volume as well. 200 moving average, first hit off an uptrend. If you look at this spot right here, if you look at this general vicinity, it tells you the trend that you're in. And if you don't know what I'm looking at, then just stay subscribed, and eventually I'm going to do these tutorials and see that this is an uptrend right here building up. If you don't see it based on the moving averages, then you have to train your eye to do that. Because pretty much that was a no-brainer buy right there, and also a gap fill just right below it. Okay, guys. So your stop out would be very close. If you're building a position for higher prices as a swing, that would have been beautiful. But that was a trade right there on the SPY. Another swing that scalp that I did today. Not much to do. The run up, just grind higher all day. But I went ahead and tried a short here. What were the factors for that? Pretty simple. Was this hammer candle here? I took it off this hammer candle. Wasn't on great volume, but the key is where the hammer candle, or what do you want to call it, inverted hammer candle forms. Look where it forms. Look, it's forming at resistance. Okay, if you look at this range, this kind of channel that we're trading in, it's at the very top. And also, if you want to look at it, it's like a wedge. If you get rid of this one, it could be also a rising wedge as well. If you look at just these trend lines, it's also very at the top of there. And it was also a 618 retrace from the high to the low. So all these kind of little factors that made me pretty confident. If you take the fib from the current high of this year to the low that I made at the 50-day moving average, the retrace is a 618 Fibonacci retracement, and that was another reason why I went ahead and took that. Just as an intraday play, and the stop out's very close. I mean, I took it on a retrace of this candle, so I took it right when it retraced right here. 50% of it. Stop out was very close. I mean, it's like a 5-cent stop. Very simple. So I went ahead and took it. The first, right away, in the next few minutes, it dropped nicely, about 15 cents in SPY or 20 cents, and I went ahead and took it right at the 10 moving average. And that was a beautiful move right there, as it did retrace back up, make it to a new high, kind of just kind of shook you out here if you were in that, and it went down for the rest of the day. But that's a quick scalp, just crumbs. Make more money on the option selling side, but nonetheless, if you know what you're doing and you know where your stops are and you know when the trade fails, you should do pretty decent day trading. Just have to buy the stops, keep the emotions out. Okay, so that's what I'm looking on the SPY on intraday. Tomorrow we have the FOMC meeting, so it's pretty much make a break here. It's all up in the air, 50-50 chance where we're going to go from here. But we did break out of this pivot high over here, so that does bode bullish. The volume is not too great in this move, but we did break above this recent pivot high. So that usually, if we can confirm here, another close above this, I think we can possibly make a double top or maybe a higher low in this range. Okay, guys, as we consider to consolidate here, we're taking a bigger breather than normally, and these corrections have been pretty shallow. Just one hit to the 50-day and just right away just zoom back up. Now we're doing a little bit more construction below. We're actually above a 20-day moving average, but it took much longer to consolidate. That's why we made that consolidation triangular pattern. I thought maybe this time it wants to break down. We did consolidate between these moving averages, and now we're starting to break back up. So that's quite a bit of a surprise. I was actually anticipating that trade, the 158 put that I sold, to be a little stressful, but actually breaking to the upside. But we'll see Wednesday on the Fed meeting and see how that all plays out. Right now, if it does hit in this upper ranges here, I wouldn't be afraid. If it hits this pivot here, I'd sell some upside calls, maybe above this trend line right here. And you also have the Bollinger Band here, and you can actually make a case that this is going to be a very important pivot high because we never closed above it. So if you draw that trend line across, lines up with the Bollinger Band, it's probably coincides with close to a 75% retracement. But right in this range here, I would look to sell some iron condors. Turn my bull put spreads into an iron condor right around this level. Okay, guys. That's just a little bit of analysis. Whoa, went 8 minutes on the SPY. IWM, let's go. Similar, breaking out of this same kind of range here, just kind of consolidate here, break it up. So you can kind of consider this the inverse head and shoulders, actually, if you kind of go into the intraday time frames. Let's go to our time frame. But when these patterns form at the very highs, you got to be very cautious that they could fail at extreme highs. Okay, so if you kind of just draw this across, you could make a case that this is some kind of a bottoming pattern. Okay, you made a kind of a low here, you made a lower low, and then you made a higher low, and then now it's breaking this resistance. So you have to expect that there's more upside in this market. I don't think we've hit max upside for the year. So I do anticipate that eventually we will take out these 52-week highs. Okay, guys, let's look at the Qs really quickly as I just kind of do a quick update. I hate to leave you guys with no videos. So that's the Qs right there. Just kind of the same idea, breaking this trend line. That's a key right there. When you're breaking, the pattern of lower highs, you're all of a sudden breaking out. You do suspect that you're going to test these pivots, okay? And that's when you start drawing a fib and see where you go from there, okay, guys? It's not always set up. So if you guys want to be a smart trader, you just have to be patient is king, okay? Got to be patient and just wait for the right setup. So also on a 618 retrace on the Qs as well. Amazon called that out a few weeks ago as a breakout, as it broke out. It was like 2 videos ago. Called it out. Bullish consolidation here. Time count. Doji set it up. Nice 3-bar move. Nice retest of this trend line. Oh my God, technicals just work beautifully. If you don't see why this broke out here off this consolidation, time count, Doji was the trigger. Blast off. It was a confirmation of this level. Retested it here on another time count. Bullish reversal candle here. and sure enough, you're getting a nice retest of this high right here. Beautiful, beautiful. And we could look for a short, perhaps probably in the 300 range, just based off the 300 even dollar number. But right now, if you want to just draw, the ranges of it, just still in this range, hasn't taken out this previous high over here. Okay, right in that level. Okay, consolidating beautifully right now. At that level. So I do anticipate I wouldn't short here, but on the next break, the next level would roughly be 300. Appears for 300 level, just based off the even number of $300. Let's look at Apple. Apple kind of just lagging here, not really forming that right shoulder that I anticipated. But it's still in the progress right now. It's still trying to make that. The latest Apple meeting was not really great in investors' eyes. So that was a catalyst for this to break out, I believe, and just investors were not pleased with that. So it's just kind of just stalling out here, not really doing much. Okay, guys. So we'll see. It's kind of just chopping around on the moving averages here. So not much to really say on Apple right now, not from what I'm seeing. But potentially it's still has potentially can still make the shoulder. But I'm really looking at Apple right now. Let's look at anything else. Facebook looks like I made a nice little bottom here, short-term bottom here. Could potentially be kind of an inverse head and shoulder as well. But actually we didn't close above it. Actually, we didn't close above this neckline, if I meant, and we did kind of make a bit of a hammer candle here, guys. So interesting to see on Facebook, just having a hard time. But if we can break out of this range here, if you connect these pivots, and let me go into the hour chart, you can probably see it a little more clear. Yeah, if you see it's totally failed here. So if you want to draw it from here, it's still, yeah, if you draw it from there, actually it's still in play. Just pretty much closed right at that trend line. So let's see how Facebook pans out. I mean, I'm not surprised. It did run into a declining 200-day moving average on the 200 moving average on the hour chart. Let's look on intraday 10-minute and see. Pretty much closing right at that trend line. So let's see if this pattern can play out. Right now, it is in the midst of failing, but sure enough, if it's also could be a triangular pattern as well. It could be just a retest here, but we'll see how it plays out. Maybe it needs more consolidation in this little range, and then it'll go for another try. But right now, not much to do. If you want to play it any kind of close with conviction, will negate the pattern for now. But it can come back in here and continue to consolidate, and then break out later, and maybe just draw a wider range of the triangle, just become more wider range triangle. But gap fill's coming up, so if you want to play that for intraday play, that's always a possibility. Anything else I want to take a look at before I take off? Look at GLD. I haven't looked at gold for a while. Gold's still making that bearish pattern. It does look like it's headed for lower prices. I mean, if you look at the overall pattern now, it just looks like a what's it called? A descending triangle. Usually descending triangles have a flat bottom, but this is pretty close. Coming off a down leg, you have to look as this is pretty bearish. Look at the moving averages, just trending down here off this down move. So it does look like it's building strength to go lower. That's what I'm seeing. I mean, this is the third hit, so I don't expect it. When it gets to the apex of this corner, we'll see where it breaks out. But right now, you have to give the benefit of the doubt to the trend, the pattern, and it does look like it wants to go lower. Okay, guys, look at the moving averages, look at the pattern, look at the fell off a cliff here. Now it's just consolidating in this range. You can make a case, like I said, it's a descending triangle. Usually those break down to the downside, and the measured move does take you quite further down. Okay, guys, that's GLD. Anything else you want to take a look at before I take off? Beautiful week so far. I'm looking to close this week with beautiful profits so far. Only 2 days so far in the week, and beautiful profits from those puts that I sold, from the bull put spreads and the scalp. So awesome day so far. I'll update you guys when I see something great, and I'll let you guys know. And if you guys have any comments, please put them in the box. Ticker symbols, and go ahead, feel free, enter them in the box, and I will go over them in my next video without a problem. Okay, guys, have a great one. I'll talk to you guys later.